What's up, everybody? It's Brendan,
And Jacob.
and we're out of Crypto Consulting, and we're going to talk about a few different investing strategies. One is trend following versus mean reversion. A little bit of intro about these. These are two types of trading strategies, like I just mentioned, and they are numerous indicators that you can use to create your own personal strategy. You can do a little bit of trend following as well as a little bit of mean reverting. And you can really figure out what one works for you. And we're going to jump into it right now.
So starting with trend following, basically to give you the simple answer of what it is, you trade in the direction of the price. So whichever way the price is going, you trade in that direction. For example, if the price is rising and you confirm that the trend is going upward, it's a bull market, then you buy as soon as it's confirmed and you get out once it's confirmed that it's going to start going down. One indicator you can use with this is the moving average. That's pretty much the simple version of trend following. You sell when the trend reversal is confirmed. This strategy, you typically see smaller losses and a few large gains. This is kind of where you hit your big gains. You kind of need to be emotionally detached and okay with taking losses, because typically when you're doing this, you take a lot of small losses, but those big gains, when you hit them, they're really big gains. Of the two strategies, this is probably less used than mean reversion, and it's better suited for markets that display powerful trends. When you're looking at time frames, if you're on like TradingView or wherever, you should know that these trends, they take time to mature. You need to give it time and be patient and confirm a trend, and don't jump in before it's confirmed, because then you might get screwed that way. It's typically better for longer time frames and longer holds. I think for the most part, when you're looking at trend following, you look on the 4-hour, the daily, or sometimes even the weekly. Just looking at a chart here that I kind of drew up a little bit, you can see down here, once this broke this and it confirmed the uptrend here, that's where you get in. I wouldn't have sold until it broke this line, because you can see here it's a pretty obvious support line. Touches it 3 or 4 times, pretty obvious resistance line. But once it broke this, that's when I would get out, and that's pretty decent gains right there. Same thing for here. It's less of a bull trend. It's not going up as much, but there are higher lows, higher highs, so you kind of get in. I think I would get in once you see the second higher high. Get in here and then sell here for a decent amount of profit. Another trend down here. You can see the support and resistance lines pretty clearly there. And then moving on to mean reversion.
So another thing just to cover with trend following too, you're going to see, like Jake said, there's going to be 65% are going to be small losses, while you're going to have 35% be big gains. And that's interesting to see too, but the gains are exponentially anywhere from 4 to 5 times bigger than any of the losses. So jumping into mean reversion. So almost, he said trend following is a much smaller tool. It's actually 10% of the people use trend following, while 90% of the people use mean reversion. Mean reversion is the strategy that is looked at where you want to, when people say we're going to go buy low, sell a high. It's the most accepted view, and it's the most accepted strategy, as well as you kind of use your emotion, a lot of emotions in mean reversion as well. You always try to trade in the opposite direction. If the price rises, you're going to go ahead and sell, and vice versa. If it's dropping, you're going to go ahead and sell. What we're looking for, right, is a mean price. So a price that, in our minds, what it's worth. That's kind of what we would base all of our trades upon. So if we pick one, we think that Bitcoin should be at X amount of price, we're going to sell if it goes past this price. If it goes down, then we're going to buy if it goes low, sell if it goes high. So there's two ways with mean reversion. There's short term, where you can a lot of people use it for day-to-day trading stocks daily, as well as you can also use it for long term as well. In the short term things, you're going to have smaller gains per trade because there's a specific exit point. You're like, all right, I'm trying to get to this price, and then that's when we get out. But you also can do less losses because you're like, all right, I'm going to get out at this point. But the probability that the market will reverse the trends will also shock the market. Um, it's typically better suited for markets that are less susceptible to powerful trends. Also, it's a very risky in crypto just because the market is highly volatile to the point where mean reversion, it's like you could make a ton of money or in make anywhere from 10 to 15 times your investment, all the way down to losing almost that much, just because it is so volatile. So mean reversion, some of the main goals, it doesn't really work well on a weekly or monthly basis. Like I said, it's usually either day-to-day stuff or it's going to be long-term stuff. You can use the 4 hour or daily, but stick to lower time frames, so there isn't much room for your the trends to go ahead and take way off, or um, either go down way too low and cut your losses.
I can go ahead and go over this chart as well. It's same chart I drew up earlier. It actually works for mean reversion as well, but it's a little zoomed in. I just wanted to show the median price here. This is kind of what most people would value. This was value Bitcoin at in the middle here. So obviously you buy low, sell high. So you'd buy around here, buy this dip, sell it up here before it drops again. Same thing here, buy low, sell high. This is your median price. So once it dips below that, sell or buy, and once it jumps up above that, go ahead and sell, take your profits. So pretty much concluding with these two strategies, they can complement each other. Of course, you can make up your own strategy, your own mix of the two, however you guys want to do it. We'll leave you with that, and as always, this is just us passing on some knowledge to you, just trying to give you the tools to make your own decisions and investing in crypto or whatever you decide to invest in or not invest in. Totally up to you. That's pretty much it. Hope you guys enjoyed. Later.